When it comes to cryptocurrency trading, knowing how to use technical analysis is a must, as it's the most effective way for you to determine market trends. I know many inexperienced crypto traders trade solely on news and rumors, and they've ended up losing money. Why? Because they trade based on other people's opinions, or in other words, they are gamblers. So if you want to become a profitable trader, you'll need to master some technical analysis techniques. Before we go into how to make use of some technical indicators, you must first understand support and resistance. In very simple terms, support and resistance are essentially floors and ceilings in a market. They are price areas that tend to act as barriers. The support and resistance concepts are developed based on a psychological basis. As traders, we continually rely on what happened in the past in technical analysis, because we see that the market patterns and interests repeat and repeat. This is no more than a reflection of human nature and the analysis we make of relative values, which we tend to stick to until we're forced to make an adjustment by the actions of others, in this case, via the market. Support is an area where traders found it attractive to buy previously. Or in other words, it's the price level where traders thought that the price was so low and they could make a profit if they placed a long position. And if it was attractive once to buy in this area, it may well be again. On the other hand, resistance is an area where traders found it attractive to sell previously. If it was attractive once to sell in this area, it may well be again. So, how can we trade support and resistance? We'll consider buying or going long when the price breaks up through the resistance level. And we'll consider selling or going short when the price breaks down through the support level. And we'll keep holding when the price is between the support and resistance levels. Okay, here's a quick example so you can understand clearly how support and resistance work. Now let's take a look at Bitcoin's chart. Can you quickly point out where the support level is and where the resistance level is? As you can see on the chart, we have a support level at around $6,000. In November 2017, Bitcoin's price surged from $6,000 to over $19,000. After hitting the new high, its price went back down to the $6,000 level and bounced back up again. So we can easily know that there's a support level at around $6,000. Similarly, we have a resistance level at around $19,700. The price failed to break up through this level and went back down to its previous lows. We also have a resistance level at around $11,700. The price attempted to break up through this level many times, but failed and went back down. So after doing a quick support and resistance analysis, you can instantly know it may not be a good time to buy Bitcoin right now. As you can see, its price can possibly drop to the support level at around $6,000. So if you're looking to buy Bitcoin at this time, you may want to wait until its price drops to $6,000 and bounces back up, or wait until its price breaks up through the resistance level at around $11,700. In the next lecture, I'll talk about risk management and teach you how to protect your profits.